Welcome to this episode number 91 of Your Next Trade. Code today, no MAGA. So markets are making new highs. We are talking the S&P 500, Nasdaq. We are talking Europe. But in the meantime, there are many talks of the end of the US exceptionalism. Sorry for that. Which is, how the US market have been outperforming the overall market. And that is another way of saying that since the election, there has been no MAGA. So let's start with the chart that we have at the bottom, which is the the World MSCI ex-US versus the S&P. Okay, so as you can see, just before the election, the S&P 500 outperformed the overall market non-US as the expectations were roughly for Trump to be winning. And since the election, which have been here, and more importantly, since the inauguration at the start of the year, we have seen a strong outperformance of the non-US market versus the US market. And we've seen many talks, as I said, of people saying, this is no MAGA, this is actually the rest of the world that finally is going to be doing much better. So as always, as traders, as investors, we need to be looking at the things over the different time frames. So this is your 2-month time frame at the bottom, and here this is your time frame since 2013. And as you can see, this chart that you have here, this is roughly the small blip that you have at the end of this chart. But overall, that has been the underperformance of stocks non-US versus the US. And this is why over the last 20 years, if you've been an investor, you have been better off like by a long margin being long the US market versus the rest of the world. So any calls of this is the end of the outperformance of the US, there is no MAGA, there is no, or you want to see something that is due to elections. Don't get me wrong, the elections, if you look at Trump, it was elected here first time, then that was Biden. So we had before and after Trump, the outperformance of the overall market from the US versus the rest of the world. So don't look too much into politics and what is happening because overall, this is only the blip that we have here. So let's look as always at the year-to-date asset performance. And as we can see, S&P, Nasdaq are now up 4% on the year, whereas Europe is very strong, roughly 10% due to the Ukraine talks, some better EPS for the year, some expectation as well as Europe as a second derivative of China, and China restarting will be doing a bit better. So last weekend, if you remember correctly, we discussed the Ukraine possibility of the end of the war, and we talk about how to play it. So it happened from Wednesday onwards. So if you think about what is priced in by the market now, be careful because we had a big move for Europe so far, and we could be looking for some correction. So I want to jump into this week-to-date asset performances because we had the option expiry, and as always with the option expiry, we do have like a grind going into big strikes, and for the S&P we went to the 6130, 6140, and that explained partly how the US market and the Europe have been doing very well. There is a trend as well where we see more and more options on the European markets and pushing the market higher. So Euro stocks up 3.2%. As we can see here, a bit of weakness, and that's an understatement, of the US dollar, down roughly between 1.5 and 2% versus most currency, because as we're going to see later, the US 10 years has been coming down. And yes, as I said, there is questions about, the US exceptionalism and how, investors, as we saw over the last 6 weeks, there has been a lot of flows going non-US. So I'm talking mostly Europe. So Europe experienced massive inflows over the last month. So week-to-date industry performance, this is interesting because you do have like gaming, and that tells you a lot about this US market and how the overall market is doing. You get the many retail traders that are back on buying those call options. We can be naming names like HIMS, which has up like 25%. We can look at Palantir as well, which got good fundamental but doesn't explain what kind of valuation that we have here. Other end of the spectrum, some something that we discuss in the community. We got airlines, we got as well the regional bankings, the banks that have been struggling a bit. So if we look at the sector performance, only healthcare was down for the week, with financials being flattish. Why? Because healthcare, we saw some stocks down 35-40% on outlook for 2025. But roughly technology back to where it stands, which is outperforming the overall market. The Meta is up 20 sessions in a row. Nvidia has been really strong as well. So overall, if you look at the overall market, most indexes will be doing like the S&P 500 except healthcare and IT. What about the rate? So we are standing at 4.5% on the 10 years, US 10 years. We went to 4.65%. What is interesting is we had the US CPI and the US PPI. So both numbers for inflation on Thursday and Wednesday, and overall the numbers were higher in terms of inflation. So we got rates coming down, but we want to believe that going forward the Trump administration will be good at cutting costs, and as well that they will find ways to reduce the cost of the 10 years. So now looking into the Fed expectations, it's funny because I think it was on Tuesday and Wednesday, Powell said that inflation is totally under control or roughly under control, and then we had inflation. So if you remember correctly, in 2021 they said that inflation was under control, and guess what? It did not. So I'm interested as a trader, what is the market pricing? The market is pricing roughly minus 0.39% cut in 2025. So that's not even 2 times 25 bips cut. What about the VIX? Volatility, we are back to the 2017 playbook. So if you've been trading in 2017, we had many headlines about Trump administration, noise, tariffs, but overall the market kept on going higher with lower inflation. Lower volatility. The difference is, I think, instead of having the 10% VIX that we had in 2017, we're probably going to have a higher floor due to some uncertainties, due to tariffs, but as well due to really the underlying of the economy is different than it was in 2017. So probably the floor for the volatility is 3 to 4% higher than it was in 2017. So let's look at technical analysis, starting with, as always, with the S&P 500. So if you look at the futures, 61.32, I told you before, I have some put spreads for some downside. I think now it's questioned. We have the US market that are closed on Monday. We got this expiry, so 61.20, 40 is a big level. If you look at the Nasdaq, we are talking as well of a good move and making new highs. So some good momentum going into this expiry. As we discussed 2 or 3 weeks ago, we do know that very often the first 2 weeks of February are pretty good in terms of seasonality. Going forward from February to March, the market is a bit weaker. So I'm hoping that the market will follow my playbook. I'm interested into Meta. So Meta, why? We have been making 20 sessions in a row as an uptrend, as an up moves. It's really, it's very, very impressive since we had the big, the earnings, but really the market has been pushed higher. 20 sessions in a row. This is something that is very rare for the market. I'm interested as well into Walmart. So Walmart, I give you the chart. If you think about Walmart and what they are doing, so I give you a longer chart of Walmart still 2017. It's almost like this is a tech company, as we're going to be saying later. So the stock is up from 52 at the start of 24 to 100 something now. So almost parabolic. If you look at the EPS and the P of Walmart, we are talking 40 times earnings. So market has been completely re-rating the Walmart. Not, I think, for the good reason. It's not all about the EPS, but really that tells you a lot about this chart. So I want to go back into the Excel spreadsheet, looking into what has been happening this week. And last weekend, we flagged 3 things. We flagged Ukraine, Russia. This is what happened. We had a very a strong move of the S&P of Europe on Wednesday and Tuesday, as Trump has been talking to Putin, and now there are hopes that the Ukraine war will be over in the next few months. I think the market is pricing a lot already, and as always, it's be careful with talks. Second thing was PPI, CPI retail. So let's look at starting with the core retail sales month on month. They were down in January. Very often what happens at the start of the month, so there is a bit of resetting, and the data are a bit misleading. So we can argue that it can be due to that, but overall the US consumer in January doesn't look as strong as what people might have thought, especially on the MAGA and everything is going to be fine. So if the US consumer is making 70-80% of the GDP, that is really something that we need to be keeping an eye on. Second thing that was interesting from the macro was the core CPI that printed 0.45% month on month. So inflation is ticking higher in the US. So if you look at this chart, and we don't do technical analysis on chart on macro, but that just to give you a bit of what is the blip for this January 2025 CPI month on month, almost plus 0.5%, and despite all of this, the market, as we can see, so this is the blip that we have for the CPI, and then we rallied. Why? Because we get option expiry, and this market is very much driven by options. And finally, we got some talks on tariffs, but instead of having tariffs immediately, I think this is the art of the deal. Probably the tariffs are not going to be coming immediately, and it might be coming in the next 2 to 3 months. So a bit of a relief for the overall market. I should be adding as well that EPS for this earnings season, if you look at the EPS growth, has been pretty good year on year. So we are talking 10% plus, but there has been some downgrading of or some revisions for the numbers going forward. So as always, now I'm interested into what could be happening in the near future. So the OPEX is over. So that means we get a resetting of most options position. As I said, normally, very often you do have between February and March a bit of weakening of the overall market. So that's for your seasonality number one. Number two, you do have like less earnings. So this is here, you do have very much less earnings. You do have like many names, but not so much big names. For me, the interesting one is going to be Walmart. And here I want to give you this chart of Walmart, which gives you on the left-hand side in white, the last price of the stock versus in blue the EPS of 2025. And as you can see, the stock has been moving big time versus EPS. EPS here have been lower than they were expecting 2 or 3 years ago. And despite all of this, the stock is up 100%. So that tells you two things. That tells you that the market overall has been repriced. So we went from a PE of 17, 18 times to 22, 23 times. That explains, 20 to 30% of the move of Walmart. But as well, the market has been very much going into very few names. So the concentration, we are not only talking tech, we are talking as well retail. So the big leaders have been taking almost everything. So what we do have in terms of earnings, as I said, we do have like Walmart, we have some other names, some high beta names, but not as big as the previous weeks. We're gonna have in 2 weeks NVIDIA, so this is obviously the next big catalyst for the overall market. In terms of macro, we do have like the flash PMIs on Friday. US market is closed on Monday, so will be a slow market for the rest of the world on Monday. We will be restarting on Tuesday with the meeting minutes on Wednesday and as well some Fed speakers. If you are in Australia, you get the red decision between Monday and Tuesday for the rest of the world, where the expectations are for a cut of 25 bips. So overall, this is what we have for the week. So very strong market making new highs with the US markets underperforming the rest of the world. Having said that, overall market, this is a risk on. We've seen a lot of inflows from retails 2 weeks ago. Even this week, we've seen a lot of inflows as well in Europe. So that explains the outperformance of Europe, for example. So this is it for me for today. If you are interested in the 4x4 video series or the mentoring, we do have like a lot of people that have been joining for the mentoring because we have a new mentor as well. So if you are interested, you should be hurry up. We do have as well the trading community where we got a free channels, or you can have access to 20 to 30 channels which will be beyond the paywall. We will be charging you $74.99 per month. We are putting a lot of value. You get access to us, you get access to economic data, and that's the way we want to build the community going forward. Any questions, you can reach me at Greg at Dupont Trading. Other than that, I wish you a good trading week. Bye-bye.